Hey guys, so US retail sales data underwhelms, lackluster, just not good enough really. And bear in mind, this is still data for January, not February yet. Remember how I said markets are going to be heavily scrutinizing the data that comes out for February, okay? So at the moment, we're still getting much of January's data. Remember, it's always a month behind, and then we're gonna be getting February data to see really how much of an impact the coronavirus has had globally, on key data points such as obviously retail sales. Well, it all ties in together, okay? So in terms of this retail sales anyway, coming in generally in line with market expectations, but lower than the prior numbers. But bear in mind as well, the prior months were also revised to the downside. So really disappointing somewhat there. And we had industrial production as well out of the United States, which was also softer. Now, bear in mind all of this week and the back end of last week, we saw very much pumping to the upside for the greenback. However, we're starting to see a little bit of cooling now, and that was triggered obviously on that softer or underwhelming data from the United States. So what does this mean going forwards for the dollar? Well, we've got some big data points next week as well. So we'll see if this softer data has set a trend to start seeing a little bit of a correction, because when we see such big pumps in a short space of time, so consecutively, so consistently, they are typically vulnerable to a technical correction. And given that data wasn't great, it does set itself up for a potential near-term correction. Guys, other than that, that's it from me. Have a smashing weekend, and let's get it. Just